Ethereum has structurally and on its own chart been a lot easier to trade than Bitcoin. Things have been more obvious, but there has been one not so obvious thing that has greatly affected Ethereum price that I didn't anticipate. And I want you to guess what it is as we're starting off here. It essentially coincides with this being more powerful than Bitcoin's move. And it was very unexpected. Ethereum versus Bitcoin was not looking good for the longest of times. I mean, look, since it should be about September 15th over here. Yeah. So September 15th is all this area when the merge stuff, and then after the merge, everything went down. So from that point, Ethereum, this is Ethereum versus Bitcoin. Doesn't mean Ethereum price is going down, but this whole time, if Bitcoin's going up and this chart goes down, that just means Ethereum goes up less. And if Bitcoin has a one-day pullback, Ethereum's pullback will be bigger, right? To the downside, for example. So this doesn't mean Ethereum price goes down, but exactly in the middle. So almost exactly, literally, like, listen to what I'm about to say. This is weird. In Bitcoin's recent 5% move up or so, exactly in the middle of that, right? When SPX was hitting resistance and making lower highs on small charts, Ethereum versus Bitcoin just went boom, flew up in the middle of it, and then during the middle of that just outperformed Bitcoin, and it hasn't stopped. It hasn't stopped. So keep an eye on this chart. If you're dealing with Ethereum and you're trying to get a feel for price, this chart's really important. It took me off guard, honestly. I even was saying before this happened, right now it's better, if you're long, it's better to be long Bitcoin. And that changed in literally a 1 minute candle. It was so watch out for that chart. It took me way off guard. All right. Now, but from a structural standpoint, Ethereum versus the dollar, that chart is, I think it's easy to read. So here's my read and why I'm thinking this rally has an extremely strong chance to hit 1720. Zooming out, we have origin lines. Let me get rid of some of these guys. There we go. So all the lines going up like this are origin lines, and they work almost perfectly on Bitcoin and Ethereum and most altcoins. So if you come down to this one, this origin line here, and bounce up, you're likely going to get resistance there. Even if Ethereum can eventually go above it, it's going to have to pull back from that area, likely. They're extremely likely, right? So zooming in, so this is years and years of price history. This is the 2017 top right here. Okay, so we're focused on this yellow line, which is extremely important because this was the ultimate support, essentially, like the main support of one of the two main supports. So the line above it and the yellow line were the main bottom supports for price in the bear market. So this line's kind of a big deal, right? And coronavirus went below it, got back above it, and used it as perfect support and rode it for quite a while. I mean, look how many days that was over here. That was 87 days, right? It looks like not very much, but 87 days just riding that line, right? And then previously using it as support, crashing below it and racing to it, pulling back. See how it pulled back from there? It did not get above. That's a 15. So that looks like it could crash, right? 15% is compelling to the downside, but it was just a higher low on the daily. So a pullback from this area is very, very likely. And look how much momentum price had here. This was aggressive. I don't know if you were in crypto at that point, but this was a very, very aggressive move. It looked like price bouncing on a bounce house especially on the 4-hour chart. If you look at it, it looks like this. It had deep bounces, but it was aggressive still. All right, so that's the same yellow line. Pullback's very likely to happen here, no matter what. But when you have two important lines in close proximity, and they are both some form of resistance with which price wants to interact before heading down, you typically choose the top one as a target if they're very close and they're pretty major. So this box here, this green box from here to here, this is a 2017 horizontal that interacts with the Wyckoff distribution drop. The the manufacturer dump of Bitcoin, right down to 29K all in like 2 days from 55K. This is where, this right here is where Ethereum found itself and just bounced right off of. And this was also Ethereum's big breakdown point later. So zoom out. Those 2 points that I'm talking about are right here. Fabricated dump. It bounced off there 3 times, and that was the big breakdown of the biggest down move Ethereum's had. When everybody on Twitter is like, it's over, or whatever, it's the same line. So it's 2 exceedingly important lines. Oh, did it just get rid of that? Why did my yellow line just disappear? Oh my goodness, I hate it when that happens. I even have my stuff locked. For some reason on my mouse, if I use my wheel too fast, it makes the origin line disappear. I don't get it. All right, let's make that bad boy yellow again. All right. So you have 2 exceedingly important lines in the same area, and it essentially makes a triangle. So I would assume that this triangle is my target, but you have a pretty a rule that works very well. 2 close resistance areas, very important. It's going to hit the top one. So what is this line? It's 1720. And I've already shown you on top of that, even outside of that horizontal being there, there is extremely strong reason that you would get a pullback from this area because of this origin line. Even if it will blast through, it's probably going to come up here, then come down and try to find something there. All right. So 1720 is my target for Ethereum. And along with Bitcoin, Ethereum could easily have 4 red days in a row. So be careful with this. It could easily have 4 red days in a row. I will repeat that. And still be bullish on the daily. I'm telling you, like, it could look bad. Like, even into what would be really wicked is if it had Thursday, Friday, Saturday, Sunday, and then started off Monday going all the way down to here on a wick, like 1345. And then that candle reverses like this and simply leaves a green tail for a wick. That's still a higher low on the daily. That is still bullish all the way down to 1360. It's still a bullish formation. As crazy as that sounds, it is true. So, and you'll see that it breaks the neckline. Like, this is a general neckline. It could easily go below it. I hope, most likely if you start closing multiple days down there, okay, the rally's probably over. But it could easily go below there. And that would flip a lot of people bearish, and it could still turn around on your faces. All right. So how do you reconcile this? In general rules, as long as Ethereum price stays above 13, let's just call it 1347, then I would be looking for the next bounce to more than likely make a higher high, higher than this high, and end up hitting 17 and change. Right? And that's it. I would remain bullish on the midterm time frame. Clearly, you can trade down, from then to now and make great profit with leverage, right? You can attempt to trade down. If you're bearish, it kind of looks like it's going to come down in here anyway. So, and it would still be bullish. So might as well. But realize if you're trying to play the short, I just told you what could happen. And honestly, I think that from a whale perspective and their incentive to make money by taking advantage of, retail and just everyday people, this is a perfect scenario. It would convince so many people that the rally's over. And a lot of liquidity come on the table in the form of shorts. So, and then my downside, another way that this could break down is if, like I said on my Bitcoin video from today, that if on Friday specifically, SPX closes a red week, that would be the only conditions within Ethereum having this nice higher low. I would be on a lower high watch then, because SPX will likely destroy the rally with a red closed weekly candle. But that would all have to happen on Friday. So if SPX closes green at New York time on Friday around 4:20, 4:30, then as long as Ethereum is over what, 1347, I'm still looking for higher highs and that being a higher low. Making sense? Very simple analysis, simple target, simple when my probabilities flip or when my bias flips, just clear line in the sand stuff, and one that is timing based, based off SPX. Everything's clear cut and dry on Ethereum. And honestly, if you are somebody who actively trades, Ethereum's where it's at. I'm telling you, it's great liquidity, which means other people's algos and the exchanges themselves can't really piss around with your stops. They can't go hunt you as easily because there are too many orders for them to get through. Ethereum is a slightly more volatile than Bitcoin, and it seems to have a much clearer line in the sand, and its chart is just a lot cleaner right now. So if you're dealing with Ethereum or dealing with crypto right now, and you're more of a Bitcoin person from a trading perspective, Ethereum might be where it's at for all those reasons. So hopefully this was valuable for you. All right.